Hi, Vieira with the stockmarketlive.tv. Today we are going to discuss one of the best investment opportunities in the past few years in an American company that no one has been talking about except very recently in 2015. I'm going to explain the story behind Nvidia. Nvidia, it is one of the companies which I've been discussing for years. You find the stock forecast available on YouTube, on Vimeo, and with regards to stock forecasts in Nvidia, I never missed one single call. When I say that I never missed one single call, you find live stock forecasts where I said that the share price of this company to reach a certain price, and the shares they trade up that price and then they reverse it, they collapse it. If you refer to our performance, how to invest in the markets with regards to Nvidia, which is available on the website, in the past few years I defended that once Nvidia crashed down to $12.70, this company to be a wonderful buying opportunity for long-term investors. Therefore, it is not a surprise that today Nvidia, it is a stock trading where you have it, and I'm going to demonstrate where you have Nvidia trading at $31.50. And Nvidia, it has not been one of the Wall Street darlings. It's precisely the opposite. While many other stocks, they have been Wall Street darlings and they collapsed, and none of the Wall Street investors that claim to be professionals, they were able to inform you in advance of the collapse. And I'm referring to the existence of many tech companies and biotech stocks, a bubble, and the collapse, and therefore tremendous opportunities for short sellers. Nvidia, it has been precisely the opposite. So we are going to listen to a very short, brief excerpt of the stock forecast made available to investors in 2013, which is more or less 20 minutes long. However, you are going to listen just for 1 minute, which I consider that is sufficient.
You are looking at the history in Nvidia, a stock that I've been discussing here for several years. You all remember the great peak Nvidia was on long side in 2010, after I upgraded the stock with a very large long position within the range $11 to $13 with a very specific target, $26, that then gave origin to a very well-known case study. Since the stock rallied all the way up to $26, and precisely that was my upside in Nvidia, the stock then collapsed, where I called the stock very good short during the past couple of years, down to my target $12.70. This target $12.70 on the short side, it was addressed here in 2012. So below that price, I consider the stock a good buy opportunity for the mid to.
Well, it happens that Nvidia, it reminds me the case of Netflix. A few years ago, Netflix, it was named a dog by Wall Street analysts. Meanwhile, Netflix became one of the best historical opportunities in the markets in terms of performance. Well, obviously the same is not going to happen with this American company Nvidia, at least in terms of percentage return on investment. However, the scenario or the story, it is rather similar. In 2013, I'm not aware of any Wall Street analysts with a strong buy rating in Nvidia. In fact, they were downgrading the stock to sell, and none of them predicted that the stock could rally in the past years so much and to prices that today you have new multi-year highs in Nvidia. Therefore, my final words to congratulate those that have been following my guidance since the very beginning in Nvidia, where you have it, the performance and store forecast, including live earnings, and I invite you to visit the website as well as the channels on YouTube and Vimeo. Thank you, and good luck going forward as an investor in Nvidia. And bear in mind, when Wall Street upgrades to strong buy, probably it is time then you to take some profits, and thereafter to make the efficient use of trailing stops, since at these prices we are not buying Nvidia, we are instead maintaining or controlling efficiently, precisely, trailing stops as long-term investors. Today, those that they are buying Nvidia are Americans or probably Canadians, the same investors that they bought or purchased shares in companies like Bluebird or Valiant ahead of a stock market crash. But, my friends, the story repeats always. This is history, and it repeats all the time. So there is no risk whatsoever by doing precisely the opposite of the crowd.